Why isn't Tesla broke yet? You might be confused with this question. I mean, it's Tesla. How could they be broke? They have money. They have Elon Musk, so how? While that is true, there is also the part most people don't know about Tesla. They are always in the red. See, in 2013, Tesla was on the brink of failure, as customers who had paid deposits weren't taking delivery of the Model S product. Tesla's cash reserves fell to a dangerously low level, and CEO Elon Musk secretly and desperately tried to sell the company to Google. Rather than communicating truth to shareholders, Mr. Musk bluffed his way through the crisis. As there were no regulatory, legal, or market consequences for failing to own up to reality. Somehow the business survived, and Mr. Musk was celebrated for his successful bluffing. Fast forward to 2019. Despite snatching success from the jaws of production hell, Tesla stumbled in 2019. The company laid off 7% of its workforce in January 2019, a move Musk said in 2018 he hoped to never have to do again. Then, Tesla cut even more workers in February when it announced a plan to close most of its stores in order to cut costs enough to deliver a Model 3 with a base price of $35,000. The company quickly reversed that plan and decided to leave some of those stores open. It also kept changing prices on all of its cars, much to the dismay of many owners. In addition, the company started facing questions about North American demand for its vehicles earlier that year, too. To make matters worse, Tesla's vehicles lost eligibility for the full $7,500 federal EV tax credit. As of now, buyers can only get $1,875 from the federal government. The credit fully goes away for Teslas starting in 2020, though many states still offer incentives. In April 2019, the company announced its first drop in quarterly deliveries in nearly 2 years. Tesla had one of its worst financial quarters ever, losing $702 million. $121 million of which was attributed to the pricing changes. Tesla told investors to expect another loss in the second quarter as well, even though Musk had said in February that the company would return to profitability by then. The share price of Tesla's stock dropped more than $150 between January and June 2019, though it has since rebounded. That same year, Tesla made and delivered more cars in the second quarter of 2019 than it did in any other quarter in the company history, but still lost $408 million, according to a new filing with the Securities and Exchange Commission, which was an improvement over the unexpectedly big $702 million loss Tesla posted in the first quarter of 2019, which meant the Model 3 was still not successful enough to lift the company out of the red for good, even though it was the company prized possession at that time. The Model 3 was the best-selling electronic vehicle in the world in 2018 and helped Tesla record back-to-back profits for the first time in the company's history. The company sold around 250,000 vehicles over the entire year, essentially doubling the number of Teslas on the road. To be frank, Tesla has decent profit margins on every car it sells, but the problem is it turns all of that money around and sinks it back into the company, which always sometimes leaves the company dancing in the red. Another thing that sucks Tesla's money is investment. Tesla spends a lot of money in their investments. Investment could be anything like his gigafactories, research and development upkeep, equipment, headquarters, and so on. All these cost money. It's more like exchanging cash for assets. Musk spares no expense in this area, churning out $4.4 billion alone on investment. Being innovative is costly in Tesla, and Musk is really ready to pay the price. Last year, $117 million of the loss was attributed to restructuring charges related to layoffs and store closings. So how does a company in constant loss exist? The answer is simple: investors. There are a lot of people who consider Tesla an excellent investment. They are building an excellent and strongly differentiated product which is future-proofed from the problems that legacy car companies have. They are in the new economy, while BMW, Audi, and others are in the death throes of the old economy. As a result, a lot of people will give Tesla money for capital investments and expansion. People who expect a return eventually, but not today. As long as investors are willing to give Tesla enough money, and Uncle Sam keeps chipping in, Tesla will be able to sustain operations. Amazon also went through the same thing with over a decade of piling up cumulative losses in terms of actual profitability. But it never went under because there was always a pile of Wall Street cash willing and able to keep it afloat. The pandemic that took the world by storm this year didn't seem to stop Tesla, as they turned a profit of $104 million in the second quarter of 2020, despite shutting down its electric vehicle factory in Fremont, California, for roughly 7 weeks because of the COVID-19 pandemic. As a result, Tesla has now been profitable for 4 straight quarters for the first time in company history, an elusive benchmark the company has long sought. Tesla kept its finances in the black by selling 90,650 vehicles this past quarter, even with that factory shut down, an increase over its first quarter pace of 88,000 cars delivered, but still below the company's record of 112,000 in the fourth quarter of 2019. This helped the company generate $6 billion in revenue, buoyed by $370 million in energy storage sales and $487 million in services revenue. Tesla once again wasn't purely profitable based on its sales though, as it also sold $428 million worth of regulatory credits in the quarter, an increase over the $354 million in credits it sold during quarter 1 of this year, and a record for the company. The company's stock price is sure to rise, continuing an incredible run over the last few months that has seen it rebound from a low around $360 per share to now well over $1,500 per share. That run, which has been fueled by unprecedented stock market activity, optimism about the newly released Model Y, and a swirl of other factors, has made Tesla the most valuable automaker in the world. Elon Musk has promised that his company will deliver 500,000 vehicles by the end of 2020, and the company maintains that is still possible. Tesla says it's installing additional machinery at the Fremont factory, which is expected to increase total Model 3 Model Y capacity from 400,000 to 500,000 units per year. Tesla's gross profit margin was 20% compared with 17% at Toyota and Volkswagen and less than 10% at General Motors, Ford, and Fiat Chrysler. The company has maintained a profit margin of 18.8% or better for the last 3 quarters. Even so, Tesla said it ended the first quarter with the biggest ever backlog in orders for its cars. It also had nearly 20,000 completed cars on hand at the end of the first quarter that it was unable to deliver amid the pandemic and shutdown. Those sales could show up in the second quarter with virtually no additional cost to Tesla. The icing on the cake is, after earning a profit for 4 quarters in a row, Tesla could be added to the S&P 500 index, which would send much more money flowing into its shares. Also taking a page from Apple, Tesla announced plans to split its stock 5-for-1 after the close of trading on August 28. The announcement of its stock split, mirroring Apple's 4-for-1 split announced July 31st, reversed a down day for Tesla. Tesla stock fell 0.1% to 1,374 during a regular trade on August 11th. After announcing a 5-for-1 split, the shares popped nearly 6% to 1,456 in pre-market trade on July 12th. Tesla's stock split was done to make its stock more accessible to employees and investors, according to Reuters, and it will add 4 new shares to each share of the stock held by investors. To qualify for the split, investors must own shares in Tesla by August 21st. These Tesla stockholders will receive 4 additional shares of Tesla after close on August 28th. On August 31st, Tesla will begin trading on a split-adjusted basis. So to recap, why isn't Tesla broke? Number 1. Demand and supply. Tesla is expanding geographically and adding new products. Demand and supply are increasing. Analysts see strong demand for Tesla's electric vehicles, praise its new gigafactories being built in Texas and in Germany, and look forward to the expected launch of the Cybertruck, its electric pickup. Tesla also ended the first quarter with their biggest ever backlog in orders for its cars, having nearly 20,000 completed cars on hand at the end of the first quarter, all demand and paid for. Number 2. Emotions. Customers have a strong emotional attachment to Tesla's brand. Customer enthusiasm for Tesla vehicles is high. In a survey measuring cars' appeal, Tesla scored 896 out of 1,000 points, better than any other brand. The next highest score went to Volkswagen AG's Porsche with 881, which ranked as the top premium brand, and Dodge with 872, to stand atop the mass market ranking. Simply put, people love Tesla. Number 3. Individual investors like the stock. While many institutional investors have avoided Tesla's stock in recent years due to a lack of consistent profitability, the company has a strong following among individual investors. Over the past 30 days, Tesla was second only to Apple as the most popular stock on the Robinhood trading app. To simply put, there is one fellow like George Soros, if not more, who believe in Tesla and are not afraid to put their money in Tesla. I guess it all boils down to the investors. They are the lifeline of Tesla. The emotions of consumers and investors will prevail in the war between the Tesla shorts and longs. Fortunes for these kinds of businesses can reverse rather dramatically. Once everyone stops believing the same myth, the investors pull out in quick succession, and the whole thing folds like a case of Lehman Brothers, or Enron, or WorldCom. But that doesn't seem to be the case for Tesla anytime soon. They keep getting better and richer. And that's all we have for you today. Thank you for watching. Till next time.